Let's get right to it. We know everyone's been wondering about this. The big question that's on everyone's mind. Will the government send out more stimulus checks in 2025? It's a question filled with hope and uncertainty for many families across the nation. Many remember the pandemic checks, those direct payments that arrived during a time of immense economic hardship. They were a lifeline for some, providing crucial support when jobs were lost and businesses struggled. For others, they acted as a cushion, offering a bit of financial security during unprecedented times. With prices still stubbornly high, impacting everyday expenses, and the overall economy still feeling uncertain, talk of new checks is heating up once again in Washington. The possibility is being actively discussed. Lawmakers are split on the issue. The debate is complex and multifaceted. Some argue that direct payments would provide much-needed relief to struggling families and stimulate economic activity through increased spending, while others express serious concerns about potentially fueling further inflation, which could negate the benefits. As of right now, nothing is decided yet. The future remains unclear. There are significant political hurdles that need to be overcome before any new stimulus package could become a reality. For now, it's best to stay informed about the ongoing discussions. But it's wise not to count on receiving extra cash just yet. This is very much a developing story, and the situation is constantly evolving. Ultimately, what happens in Congress over the next few months will be the deciding factor in determining the outcome of this debate. We'll continue to keep you updated with the latest information as new facts and developments emerge. Understanding the intricacies of the process can help you prepare your personal finances accordingly, allowing you to make informed decisions without getting your hopes unrealistically high. So, let's take a step back. What exactly is a stimulus check, and what are the underlying reasons this conversation has resurfaced? Let's break down the key elements and provide some clarity. Here's what you need to know to stay informed and understand the potential implications. A stimulus check is a direct payment from the government designed to provide immediate financial assistance to individuals and families. These payments are not considered taxable income, offering a direct boost to personal finances, officially called an economic impact payment. This term reflects the intention behind the checks, to create a positive ripple effect throughout the economy. The goal? To boost the economy by putting money in your hands, giving you the power to make purchases and investments. So you'll spend it and keep businesses running, ensuring they can continue to provide goods, services, and employment opportunities. The government used this tool during the COVID-19 pandemic to provide quick relief, helping families meet their basic needs during a time of widespread economic uncertainty. In 2025, the economy is sending mixed signals, creating a complex situation for policymakers to navigate. Job growth for some, but higher costs for most. This disparity highlights the challenges many households face in maintaining their living standards. Wages haven't kept up with rising prices, meaning that even with a job, many individuals are struggling to afford essential goods and services, leaving many families stretched thin, forced to make difficult choices about which bills to pay and which needs to forego. If people cut back spending, it could trigger a recession, leading to further job losses and economic hardship. Stimulus checks act as a quick shot of fuel for the economic engine, injecting much-needed capital into the system and encouraging spending. You might use the money for bills, repairs, or essentials, addressing immediate financial pressures and improving your overall well-being, helping businesses stay afloat, particularly small and local businesses that are the backbone of many communities. But there's debate, with economists and policymakers holding differing views on the effectiveness and potential consequences of stimulus checks. Some worry more spending could worsen inflation, driving up the cost of goods and services even further. Congress is weighing the risks and benefits, trying to strike a balance between providing economic relief and managing inflation. Any new plan will aim to help those who need it most without making inflation worse, focusing on targeted assistance to vulnerable populations. The details are still up in the air, as lawmakers continue to negotiate and refine the proposed legislation. Let's look at who might qualify if checks are approved, examining the potential eligibility criteria and income thresholds. If new stimulus checks happen, it's important to understand that not everyone will be eligible to receive one. The distribution will be targeted, aiming to reach those who need it most. Eligibility will likely depend on your income, just like before. Your adjusted gross income, or AGI, will be a key factor in determining whether you qualify. Past programs set income caps. These limits defined who could receive the full amount, and when the payments would phase out, around $75,000 for individuals, representing the upper limit for receiving the full stimulus amount. Above that, the payment decreased, $150,000 for couples. This threshold applied to those filing jointly, with similar phase-out rules in place. The government will use your latest tax return, the one most recently filed, to check your income and determine if you meet the income requirements. Make sure your tax filings are up to date, and that you've filed all required returns to avoid delays in receiving any potential stimulus funds. Family size matters too. The number of dependents you claim can influence your eligibility and the amount you receive. Previous checks included extra money, an additional amount for each child or dependent you claimed on your tax return. The definition of a dependent could expand, potentially including more family members, but details aren't final. Employment status usually doesn't matter. Whether you're employed, unemployed, or self-employed, income does. Your total income for the year is the primary factor. Retirees and those on government benefits such as Social Security may also qualify if their income fits within the specified limits. The goal: broad relief, to provide financial assistance to a wide range of households for low and middle income households across the country. Final eligibility rules will depend on what Congress decides, so it's important to follow the legislative process. Stay tuned for updates as the situation develops. If a new stimulus plan passes, when will you get paid? Timing depends on how fast Congress acts and the president signs the bill. The IRS now moves quickly. Direct deposits could arrive within 2 weeks of approval. If you have direct deposit info on file, you'll get paid fastest. Paper checks or debit cards take longer, sometimes weeks or months. Update your info with the IRS if you've moved or changed banks. Direct deposit is the surest way to get your money fast. If a stimulus payment lands in your account, have a plan. First, cover essentials: rent, mortgage, utilities. Next, pay down high-interest debt like credit cards. If you're caught up, build or boost your emergency fund. Financial planners recommend saving 3 to 6 months of expenses. If you're stable, consider investing in retirement or education. Be intentional. Assign every dollar a job. Stay informed and ready for updates. Preparation is your best financial move.